Welcome to the LawyerFair.co.uk daily podcast. LawyerFair helps businesses find the right lawyer at the fairest price. But on this podcast, we just chew the fat with some great guests.
It is a gorgeous Friday morning. It is the LawyerFair Daily Podcast. I'm Andrew Weaver, the CEO at LawyerFair.co.uk. Sounding a little throaty this morning, I must confess, and quite happy it is Friday, so that I can have a nice relaxing weekend ahead of me. But we are ending our week of podcasts with a blockbuster because it is a really interesting topic and a wonderful guest. We have on the end of this line Julia Groves. Welcome, Julia.
Good morning.
Good morning. How are you?
Very well. I'm not quite as filthy as you.
Thank you very much. Now, Julia is the founding chair of the, amongst many talents and many things on her CV, she is the founding chair of the UK Crowdfunding Association. Now, crowdfunding is, and has been for some years now, the hot topic. I think the global market, Julia, I was reading on your Twitter feed, the global crowdfunding market is now worth $30 billion. It's astonishing.
Isn't it fantastic? Yeah.
It's astonishing. I mean, in such a short space of time. I mean, when would you say crowdfunding kind of kicked off? When was the early part of this decade?
Well, it really began, as many things do, I guess, in the States. And originally crowdfunding was used by the creative industries, filmmakers, musicians, people who had a creative talent and had a little fan base and were frustrated by not being able to raise some funds to either make that album or go on tour. In fact, there's a British band, Marillion, who first crowdfunded a tour because the record company had effectively written them off at that point.
Hang on a second. Marillion, who for anybody who wasn't around in the 80s, were awful when they were in the 80s. Let me just put that out there. Marillion were the first people to use crowdfunding. Is that right?
It's amazing, isn't it? And I think it's when you've got something which you really love and other people want it to happen, they want that new album, they want that new tour, and it's not getting financed, you can simply cut out the middleman, cut out the bank, cut out the investors. And if the fans really want this product or this event to happen, they pay for it in full up front, and that's how you raise the money, and off you go and fulfill everyone's dreams without having any debt to pay off or having to manage any shareholders. It's a pretty good opportunity if you can do it.
It's brilliant. Well, before I get trolled by all those Marillion supporters, clearly a great band, but not to my liking. But amazing that they were the kind of trendsetters in this. I'd just like to start actually, Julie, because crowdfunding is very sexy and everybody talks about it. But the definition of the different types of crowdfunding, could you just clarify equity, loans, rewards? What's the difference between the three?
Sure, perfect. Crowdfunding is kind of an umbrella term, and it's a very simple thing. It's just a large number of people putting a relatively small amount of money in to get a project or a business or something off the ground, which in many cases wouldn't normally get funded. And there's, as you say, largely three ways of doing that. The original crowdfunding, the purest form, is what we would call reward-based crowdfunding. So people are putting money into something because they want that product, they want that service, they want that experience. There's no expectation that they're going to get any money back. It's not an investment. It's almost a form of kind of e-commerce where you pay up front. Then it evolved into equity crowdfunding, and this is where the UK really took over because our regulations opened up well ahead of the States. And this is where people play Dragon's Den, I guess, that are mini angel investors, a relatively small amount of money, but they're able to back businesses and then get a return either because that business becomes profitable and pays them a dividend, or because the business, which was tiny when they invested, sells for a lot more money one day. And those are the two extremes in rewards and equity. And in the middle, the absolute lion's share of the market, I mean, something like 90% of the money is in what's called loans-based or debt-based crowdfunding, where you're lending money to a business that is a real business that exists and has revenues and, dare I say, profits, and they're frustrated by not being able to get access to finance from the banks, and then the individual lenders are frustrated by the returns they're getting currently, and the bank just gets cut out of the picture, and individuals lend through a regulated platform to the businesses, and they get a sort of a steady return, might be somewhere between sort of 4 and 6% a year.
Well, that's really interesting. I hadn't actually appreciated myself that loan crowdfunding was such a large percentage of the market.
Well, I think with the equity stuff is really exciting. I think I love the fact that the regulator has accepted that it's not their job to decide for each of us what risk to take with our money. We can gamble as much as we like, we can give away what we like, but as of 3 years ago, we weren't allowed to invest in these things unless we were sophisticated investors or high net worth individuals. So the UK has now got the most open regulation, which we campaigned for. The campaign was called "Wealth is Not a Skill Set." Just because you're not particularly wealthy doesn't mean you can't understand risks, and just because you are very wealthy doesn't mean you can. And that's what really opened up the market. But these are today largely fairly early stage businesses. They're not all two blokes with beards in Shoreditch, but a lot of them are early stage and EIS type investments where there's a reasonable sort of tax, if not incentive, compensation for the risk you're taking, because the government is trying to channel money into these new businesses. But I guess there's a more limited number of people, perhaps, and a more limited amount of their money where they can take that level of risk, whereas lending through things like Marillion, which is asset-backed lending, or through Funding Circle, which backs SMEs, you can spread that risk across lots of different businesses and just literally put sort of £100 in each. And that can be a more appropriate thing to do with your money, I guess, for a large number of people and for a larger share of their investable portfolio.
Well, it's an interesting point. I mean, the whole issue of regulation, the whole the whole discussion around. I mean, some of the pushback, I think, against crowdfunding, certainly in the earlier days, I think it's less so now. Now that the model is being tested a little, was the lack of regulation, was the fact that, particularly with equity, and that's why I was interested in the split that you have there, but particularly in equity crowdfunding, I think some of the pushback is, are people or are investors getting involved in this fully aware of the risk profile of these businesses, because they are, by nature of where they are in their life cycle, very, very high risk.
Yes, absolutely. So if you take the split very simply between, if you put rewards-based crowdfunding off to the side, so that's where you pay for a product or service in advance, that's not a financial service and not an investment, that's not regulated, nor should it be. But any form of crowdfunding where you're putting your money in with some expectation that you're going to get your money back is now regulated by the Financial Conduct Authority and has been since the 1st of October this year. And what we really want to do is achieve a sensible balance between consumer protection and opportunity. And the new regulations which came in on the 1st of October have a new category of restricted investor, which says that you really shouldn't be putting more than 10% of your net investable assets into these sort of unlisted, or what they call non-readily realizable securities. It's not about necessarily the risk of the entity. It's the fact that in all probability, when you put your money in, you have to assume it's in there for the term, and it's not going to be easy to get that money out. And so that's a fairly long-term commitment. So that means that 10% is the cap, and also you do have to go through an exercise of demonstrating that you understand the particular risks before you can proceed. Right. And it's just a nudge, is what the FCA call it. It's just a sense check with people that they understand that the capital's at risk. It's not covered by the Financial Services Compensation Scheme. They may not be able to sell it whenever they want to do it. There's no guarantee whatsoever that they're going to get their money back. And if they want to proceed on that basis, then fantastic. It really fundamentally changes the path for those businesses when they get access to that funding quickly, cost effectively. And it's not just the financial backing, Andrew, it's also the backing of the crowd. It's this advocacy that you create where all of these people now want to see you succeed because your interests are aligned.
No, I get that. In fact, again, I've been researching very deeply, Julia, so I went through the entire Twitter feed, but I like the phrase, that it demonstrates an aligning between lender and borrower. I think that's a really nice phrase. Just a quick thing, actually, I also noticed an interview, I think it was on City AM, with David Brown, which was quite interesting, and there were elements in there where he was covering some of the stuff that you were saying. And one of the quotes that I thought was quite interesting was his hope that the EU doesn't get its hands on EU regulation doesn't get its hands on crowdfunding, because, in his words, there is a Darwinian process going on to see what platforms work. I mean, what's your thoughts on that?
Well, I mean, it's absolutely the case that the UK is leading the way here, and we all have our own views on regulation and the pros and cons. But we find that the Financial Conduct Authority in the UK have been massively open and accessible, and really that's all we can ask for. Yeah. We've ended up with this level of open regulation because the entire industry has collaborated to get it there. And, I think that since 2008 and the financial crisis, I think there's a broad recognition all the way up to George Osborne that, we need more diversity in financial services. It's absolutely right that the banks are having to rebalance their books between the capital they hold and what they're lending, but it does mean that it's stymies the flow of capital into small businesses, which really are the engine room of recovery. So we've got huge policy support here, which has made that possible. Now, we do, of course, exist in the European context, and a lot of the work which we're doing is just comparing and contrasting the interpretation in France and Germany in different areas. What we anticipate potentially happening is that some of those European crowdfunders will end up setting up in the UK and passporting, so using the permissions in the UK to serve a European market. Germany have moved on significantly in the last 6 months. France, at least, it's legal, which is always something, yes. But it's capped at, sort of €1,000. Right. So I think we want to continue to grow as an industry. One of the aims of the Crowdfunding Association is to maintain those standards, but also to share knowledge and try and create the biggest possible market and try and make it as much of a level playing field as possible. I guess financial services is one of the most extreme sort of David and Goliath situations, and I think some people would argue that historically regulation has been a barrier to innovation. So it's a very, very important topic which we work on and collaborate with a lot of lawyers, as you might expect. Batesworth, Bedwade and Osborne Clark, and it's essential the input that they give us, because when you're trying to drive change, you quite often have to come up with those legal points in legislation. So I hope it's of interest to some of you.
That's really interesting. I think also in terms of the UK leading the way, I mean, compared to Europe, I read that the average UK raise is €30 per person, and in Europe it's one. That's quite
it's very tricky, and so the only danger with those numbers, Andrew, is that it's so different between the different types, between rewards and loan and equity, that if you blend them all together, it kind of almost becomes meaningless. It's like when I tell my kids, they've mixed together the red, the blue, and the yellow, and if you mix enough colours up, everything turns into a sludgy beige colour. So it's probably worth looking at it. For example, the vast majority of rewards-based and donation-based crowdfunders are women. Right. And the vast majority of equity are men. And the investment might change significantly between them. But yes, the size of the market is fundamentally different. The real news is the fact that the new ISA is coming out on the 6th of April next year, which is open to crowdfunding. And that is a £473 billion market of money, which we can then address. That is tapped up, I guess, also by the pension freedoms. I think Citigroup was saying they thought 4.8 billion this year was headed for somewhere other than an annuity. In fact, 1.8 billion in the first quarter didn't go into annuities and found other homes. And I suspect that a lot of that pension money for particular age groups they'll be filling their ISA at 15k before they do anything else. And loan-based crowdfunding, which is now allowed in the new special third Innovate Finance ISA, I think that's a great opportunity for people to make a better return that they're going to get in the bank, a better risk-adjusted return they can get elsewhere. So the average on Trillion is £4,000. The donation base, as you say, is much, much smaller. I think the really key thing is it's vital that those minimum investments, the minimum amount, is really low, because there's no way to get education and experience better than putting 20 quid into something and seeing that process through. And a lot of what we do as the UK CFA and the platforms is around education. We want people to understand what they're doing. And the thing is, it's simple and it's transparent and it's direct. And, we've kind of almost become scared of our money and been educated to think that we shouldn't make our own decisions and we must have an advisor telling us what to do. But in reality, most of us can't afford an advisor anymore, and if you're only investing 5 or 10 grand, to pay 1,500 quid on the suitability test, which the IFAs will have to do post retail distribution review, just isn't a good use of money. So I think we're looking at this next generation of people, perhaps you're my age, I'm very generously grouping myself in your bracket, who might have used to have advisors but don't anymore, and then the millennials coming through who will never have had advice and who very well may not be on the property ladder, whose attitude to money is fundamentally different and who care where it's going and the difference it's making. So it's very exciting, I think, on a lot of different fronts. I must try to not get overexcited this time in the morning.
well, we love a bit of overexcitement on Friday morning, and it's a fascinating space, and the change and the innovation that's in this space, the wider kind of alternative finance space, but particularly in crowdfunding, is amazing. And that change on the 6th of April, bringing it into the ISA framework is going to be it feels like it could be the real explosion the crowdfunding. I mean, crowdfunding already clearly going in the right direction, but that's going to be a huge shift, isn't it, in terms of the finances available?
It's the size of the market, which is where
Yeah.
Hargreaves Lansdown infidelity, and everyone have now woken up and gone, holy moly, that this could actually be real.
Yes.
But I think it's also a clear signal from the government that they don't think this is going away. I mean, we've been in meeting after meeting after meeting with Treasury and HMRC working through the detail. They are quite rightly very protective of the ISA brand and space because, they think it is a signal of sort of appropriateness.
And do you think, just jumping in, Julia, you say they realise it's not going away. Do you think they were hoping it would go away? Do you think there were the establishment,
it's really
if I put it that way?
I think there's certainly some financial services firms that would like it to go away.
Yes.
But, really where it's entered the market in a very significant way on the loan-based side. I mean, the equity stuff is really exciting because it creates the next generation of angels. And it does is you potentially find customers at the same time as you find investors. And I really can't overstate how effective that is. Chapel Down raised money on Cedars, and they found that at the Christmas after their crowdfund, half of the investors bought a crate of wine at Christmas.
Yes.
Because of that alignment I was talking about.
Yeah.
But I think on the debt side, I mean, there really has been an issue since 2008 in terms of the funding gap. I did the Oxford Union debate with Anthony Jenkins in his last week at Barclays, where he insisted there wasn't a funding gap. I'm sure that's not the reason why he's no longer CEO, or the fact that I beat him hands down in the debate. Mind you, if you can't win a debate against the CEO of a bank in Oxford Union, then really you do need to go home. But there absolutely is a funding gap, and it's for the smaller businesses. And, small and medium enterprises employs, I don't know what the number is, 80-odd% of people in the UK. That's where the economy can grow and recover. And if we can't have money flowing there because the banks aren't able to lend, we're in real trouble. So I think that actually the government is really keen to see money going into the real economy. There was a huge piece of work by Andy Haldane, the Bank of England, and the Parliamentary Commission on Banking Standards saying, we need diversity in financial services, not just for choice for consumers, not just for finance for businesses, but because long-term financial stability is depending on us not having just banks that are too big to fail and too big to jail. We need lots more different ways of people raising money, and this is very different. And when you ask the businesses who've raised money this way if they would do it again, 90% say yes. And when you ask them what was good about it, they talk about the speed of fundraising and the ease and the engagement, even above the cost of capital that they've raised. It's the next generation of business where, particularly businesses that offer products and services to consumers, you cannot think of them as consumers anymore. The days when big companies invented something in a lab somewhere, spent a massive amount of money advertising on a single TV channel and told you that this product washes whiter, it washes whiter, just buy it, is totally over. And if you think of your customers as people who just idiotically consume whatever you choose to make, you're going to be in big trouble in 10 years' time. This is about customers as partners and co-investors and alignment. And you can hear my marketing background coming through. Clearly, I'm not a financial services person, but I think that's the most exciting thing, is the fact that you can disintermediate, you can build relationships, and you can build backing which goes way beyond the money that you raise.
Well, listen, you're preaching to the converted here, because I'm a huge fan, and you've articulated it magnificently. So it really is a very exciting sector. So watch this space. Julia, founding chair, UK Crowdfunding Association, CEO of Trillion Fund, font of great knowledge on crowdfunding. Thank you so much for joining us this morning.
Very welcome. Lovely to speak to you, Andrew. Bye.
And to you. Thanks very much. That was the LawyerFair Daily Podcast. I am having a weekend off, but we'll be back on Monday. Thanks for listening.
Thanks for listening to the LawyerFair.co.uk daily podcast. If you'd like to listen to more, why not subscribe and download each episode via iTunes, or visit us on the LawyerFair.co.uk website.